Good morning, traders. Today is Monday, August 22nd. My name is Charles, and this is the Pirate Traders live stream. The title of today's episode: Why is it that the overnight traders get to have all the fun? Ridiculous. So those of you that are in the brigade will recall that on Friday, what I basically said was, the fact that we had looked above this previous balance area, which is this channel right here, the fact that we looked above that and failed by the end of the day and closed back inside that previous balance area, that balance rules would tell us the highest probability was that we would get continuation to the opposite end of balance. And that's where the longer term swing traders would be waiting, that we would probably need in order to create the support to come back and break through this larger downtrend that we're in here on the ES. So, okay, Charles, no big deal. The thing you predicted happened exactly as you predicted to. What's the big? Why do you care if overnight did it? Well, the problem is the fact that it's already happened. It has taken away that probability. That was the easy target. Looking above the high and getting to the opposite end, that was easy, and we missed it. So now we're stuck at the opposite end of balance, and today will be all about figuring out, are we going to find support in here and turn around and start to head back up? Are we going to get what we call a look below and fail today, where we pull back up into balance? Or do we have a new downtrend in the market that is forming, value being lower yesterday, and the gap down today being confirmation of that downtrend? Which of those two is going to play out? Okay, well, that's a little tricky, Charles. I get it. You got momentum to the downside, potential support. You're probably going to have a little push-pull this morning. It's going to be tough. I hear you. Well, then on top of that, we also have dun, 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 a giant gap that we happen to be sitting right on top of here in the overnight. So we've got a huge magnet pulling on price below. We've got momentum coming from the downside to push the market lower, which is confirmed by the fact that value was lower yesterday, and we have a gap down today. We also have a very large gap, increasing the odds of a gap and go, where the market can't fill the gap completely and then heads back down. But despite all of that, we have that trend line. And we know that if there are swing traders who got caught off guard here, and we didn't have the momentum to break through this, remember, this is also a 200 simple moving average as well. Boom, right there. So if we didn't quite have the momentum to get through the 200 simple moving average, if we didn't quite have the momentum to get through that downtrend on the daily, we would need to bring in more swing traders to do that. Well, where would they come in? Right there. Right where we're opening today. And, oh no, it's also the 50 moving average. Another place where those stronger hand swing traders would wait to buy. So unfortunately, my prediction this morning, we got a gap. So of course, no waiting around. If we get a gap and go, we'll look for momentum to the downside. And of course, if we start to get back inside this gap, that gap fill becomes a target. But more likely what's going to happen is a very difficult rotational type of day where it's very tough to figure out what direction it's going. But that's, of course, just Charles making a prediction based on the contradicting forces at work here. Until we get other market-generated information, the target should be to the downside, right? You got value lower yesterday, you got a gap down, and you got a giant magnet in the form of a gap fill. So the first target is, can we fill the gap to the upside? Overnight inventory is net short, so we're looking for a push higher. And if we get a gap and go, the assumption should be to get bearish. My fear is just you won't get much for it, and then it'll become wrestling match. But of course, one step at a time. Can they fill the gap? I would also keep a very close eye on this overnight low. If we break 41.75.50, that would get very bearish for continuation to the downside. So if they're going to try to fill the gap this morning, they should pretty much do it right away. Man, in a gap, on top of a gap. It's likely going to be very confusing as I'm describing it today. I'll call this one the gap above and this one the gap below. So if I'm talking about we're heading to fill the gap and I say the gap, I'll say the gap below or I'll say the gap above. The old gap or the new gap? One gap or another, this market is going to pick a direction. It's also worth noting in the same way that a gap and go, okay, that starts to break the overnight low is very bearish to come, fix this, fill this old gap here. The same way a look below and fail can be to the opposite end. So if we start to poke back up, it could get very bullish very quickly. Again, what makes this morning likely very tricky. Let's see what we get. All right, the market is open. The first push is to the downside, but that makes the high weak. So if they pass back through that opening price, they're looking to try to fill the gap. Gap being to 42.21. Gap above. Weak high, weak low. Tricky, tricky. All right, with the overnight inventory being this net short, the ticks won't be too helpful right away. Going to have to give them a few minutes to kind of absorb this overnight activity. But passing back through the opening price, 41.79, increases the odds the market is trying to fill the gap. Remember, gaps this large often don't fill the first day, but they will try looking for resistance. That is the gap above. Okay, so they're going for that gap fill. All right. Well, pushing back below the overnight low here would be bearish as a gap and go. That is a very sad attempt to fill the gap. So if we push below the overnight low and start to get resistance, I will get bearish for continuation to the downside as a gap and go. So there's the push below. I'm now looking for resistance in this node just below the opening price. All right, well, no time to wait around today. That is resistance at the overnight low. I am bearish as a gap and go. I'm looking for us to stay below the opening price here. If we pass back through 41.79, then we're heading back to try to fill the gap again. But we should get continued resistance here, and the target to the downside becomes 41.39. And just see if they can keep the momentum going. Again, very important we now stay below that opening price. If we pass back through that opening price, it's a sign they're trying to fill the gap above once again. But right now it looks like they're trying to fill the gap below. But Charles, what if they just find support and then go back up and then they fail and come back through? Yeah, well, we'll deal with that if that happens. But right now, they're saying momentum to the downside. So the next major support is going to be around 41.57, 58-ish. And I would be looking for some chop there. Certainly a bounce to head back up and test the half back. One more sort of bearish signal that we can get from the market here. If they're able to get the ticks back up to the zero line, that is essentially they're able to absorb that overnight activity, the selling that took place overnight, without pulling the price back up with it, that is, of course, bearish as well. That we know that the new inventory that's taking place is sellers. And then what will likely happen is they'll run out of steam at that zero line and start trending lower. Screwball, but that move down was pretty small and without tempo. Yes, sir. That's why I said I predict this morning is going to be an absolute nightmare. I predict it's going to be very hard to read. But we've got to just force ourselves to focus on the market-generated information. Values lower. We have a gap and go. We are below the overnight low and getting resistance. So it might be a choppy journey down, but right now the momentum is down. Screwball, no motions, no morning volatility. Yeah, I suppose you're right. It's also worth noting to those of you that are joining the program late this morning, it's worth going back and watching the first 5 minutes today to kind of understand the position that we're in here. What kind of continuation we get out of this move that we're in right now will be very, very important. If we continue to push lower, it is bearish for a plethora of reasons. But if we pull back through the opening price and start to head up trying to fill the gap above, it can become a look below and fail of the balance area very, very quickly. Let me just zoom out to the daily. If we start to poke, well, there you go. We're right on the 50 right now as well. So if this is those swing traders getting in here and the market starts to push back above, a look below and fail, just like a look above and fail targeted the opposite end, would target the opposite end to the upside. So we are in a very interesting location. Who's going to win? The potential buyers that could step in here or the momentum that we're currently experiencing? Okay, taking a look at the NQ here. They also had a gap and go. They are also below the overnight low, getting resistance. So that is bearish. Looks like they found support in the A period right at a previous week low that I did not mark the date for. But that means that low is weak. Gap and go, bearish. Value lower, bearish. Resistance at the overnight low, bearish. And weak A period low, in need of repair. All right. Well, they pushed right through that resistance. That is not bearish. That is less than bearish, I would say. I'm looking for them to stay below the opening price to get continuation to the downside. If they push back through that opening again, then they're targeting a gap fill. So I'm back to neutral. Screwball gap and chop? Could be. If we pass back through that opening price, then it will, for sure. But right now, it's still a gap and go. John Doe, Charles, I have your course and I love it. Thank you for saying so. I'm curious which JD courses you did. I did the primer and the intensive. I did the primer twice. I did the primer, then the intensive, then I did the primer again. And then I took the advanced nuances course. I would suggest the primer as like a first step, but I don't think he lets you do that anymore. I think you have to take a course. And I do not suggest the advanced nuances course, as that was just more of the same from the rest of it. All right, so I'd say on the NQ, once this low, the current low breaks, which is weak and in need of repair, the next major node for support is at 28 2950. But there's a bunch of volume in between there, so I would look for a slow grind lower. But if we break that current low at 13,022, that is a sign of momentum to the downside with a gap and go. BBQ. I tried to short the retest of the overnight low, but got stopped. Would have been a sweet trade if I had my stop wider. Yeah, if you'd have been, it would have been right on the edge of your stop if your stop was above the open price. It came one tick below the open and then reversed. Oh, opening range. John Doe, appreciate it, brother. Jeremy says, buyers not giving up yet? Well, they could just be sellers taking profits for all we know. Haven't even gotten back to the zero line. That's when we'll know if there's real buyers trying to compete here, or if this is just the sellers from up here taking profits down here. Jeremy, anyone sitting on their hands? I just want to wait. I don't know, brother. It's a gap and go. Michael, correct. Yeah. He asks, is the ticks just one data point as a reference for determining if it's new buyers or sellers? Correct. But if it's above the zero line, then you know for sure there's more buyers than sellers in the market. So that means there has to be some new business taking place up here. Whereas if they're below the zero line and the ticks are pushing higher, yes, that means there are more buyers than sellers, at each bid and ask level as the market's working its way higher. But they might just be old buyers taking profits. It might just be old business concluding down here. So, but once you get back above, then you know for sure new buyers. No doubt about it. DRM 2481. Thank you for the sub. Welcome. Amari, what is the zero line you reference? On this indicator right here called the tick, T-I-C-K, if you just put a line where the zero is, the ticks will either be above or below. They're either in a negative number or a positive number. When they're in a negative number, there is more sellers than buyers, and vice versa when in a positive. to sign up. Like I've said it already, man, we knew it was going to be a tricky morning. We knew it was going to be really hard to read because of the, forces fighting against each other. But so far, it's been very simple in its message. Momentum is to the downside. Okay, as we printed the B period here, or began printing the B period here, we pulled the value area all the way down to the low of the day. The blue box is right down there to the low of the day. That is often a sign the market needs more excess to the downside, meaning it needs one more little push down there below the A period low. It's also worth noting that the A period low only has 9 contracts it traded, and that is also often a sign that there's more liquidity waiting down there. Didn't get a chance to do business the last time. Johnny, welcome. There are no dumb questions. Feel free to ask anything. He's asking, what are the orange bars on the far left of the chart for? That represents the cumulative volume. So all the volume. At the moment, I have it set for the last 190 days. So just all the volume that has traded previously when the market was in this area. And basically, I'm just looking for the big nodes, the things that stick out. It's actually much easier to see when I'm more zoomed out here. And that is when it is the most valuable. So when you're like way zoomed out like this, you can see the market tends to move, from one large node to the next, just like that. So they can be very, very helpful in that case. If it's any consolation to those of you hunting for trade opportunities, I think you're safe as long as we stay below halfback at this point. So you could put your stop above there. It's a very tight stop, slightly higher probabilities of getting stopped out. But I do reckon if we're going to get continuation to the downside, we'll stay below the halfback. If not, chopping it up, baby. Okay, we now have a poor low. If we immediately repair it, okay, we immediately repaired it. That is a little bit more bearish to see. We're also continuing to pull that value area lower. Pulling the B period 2 ticks or 2 TPOs, 2 letters, below the A period low means that the initial balance is to the downside, which is a little bit bearish. So basically, if you're keeping track, so far every single signal is bearish. Breakout of previous balance, bearish. Gap and go, bearish. Value lower, bearish. Initial balance to the downside, bearish. Push below overnight low, find resistance, bearish. Well, Charles, what happens if they find support and pass back up through the opening price? Well, then that is one heck of a when what should happens doesn't. Right now, they are saying the momentum is to the downside. Giles, you say think in probabilities. Is the chop in the B print increasing or decreasing your conviction? I would say, as unsatisfying an answer of this is, it is confirming my prediction, which is that this is going to be an incredibly difficult market to read, that it is going to send you mixed signals all day long, and that you must force yourself to listen to the market-generated information. The more signals we get, the more I'm confirmed on that principle. I'm not sure who's doing business here or what their plan is, but right now the sellers are in charge. So until I get a signal otherwise, I'm going to assume that that is what will continue. How confident am I that we're going to continue to head lower here today? On the short term, I would say very high conviction. Throughout the rest of the day, who knows? There's a lot of support below. So they could flip this market back around at any moment. But I'm telling you right now, the sellers are in charge. T, what you think of PMI tomorrow? I think I'll find out when it happens in the charts. The number will come out. The market will go up and down really fast for about 15, 20 seconds or so. And then I'll find out whatever I need to know. Eldora, great point. 225 people hanging out. What up, everyone? Welcome, welcome. If you're a good little pirate, you'll push that thumbs up button to support the channel so that I'll be here tomorrow when you come back for more. Asterix, it all depends on the time frame that you like to trade. Knowing that it's going to be a choppy, very tough grind lower, you may look to take profits and support and then sell the next resistance, take profits, sell resistance, take profits, sell resistance. You may choose to trade it like that. Another way you could think about it, though, if you were a little bit more of a longer term trader, is at the open, you could have been saying to yourself, that if the market failed to fill the gap, passed through the overnight low, found resistance there, and couldn't get back into the overnight range, that you would short with a target all the way to fill the gap down here at 41.30, in which case you'd still want to have a nice loose. You'd want to be above a half back right now and give that sucker space until you print the C period. And then 2 letters above the B period high becomes the stop. But it just depends. Are you trying to short-term trade, sell a rip, buy back the dip real quick? Or do you just want to get in at that resistance at the overnight low, target the gap fill, and just chill and let the market work its way down? Uh, Asterix. I'm short for a week now, and I think the short move could be coming to an end. Yeah, that would be the look below and fail of the balance area. So you wouldn't want to be looking at a 30-minute time frame. You'd want to be looking at the daily and asking yourself, when do we poke back above that balance area low? As long as we're below it, the momentum is in charge and further downside continuation is in play. But if we can poke back up through it, well, then you're going to get the slingshot effect to the opposite end. So that's where you'd want to stop out if you were in a short from up here. But as long as you're below that level, see what you can get for it. But on the 30-minute level, I'd just say wait till we start one time framing and use cessation. For now, you can use halfback. 41.70. Invictus, it's a great question. So at what point do I consider it a good low? I would consider this a good low right now. They got at least one tick below the value. They've got good taper in terms of volume. Does that mean this is the low of the day? Of course not. The momentum is to the downside. But if it were the low of the day, I would consider this a good low. Once you have a signal, like we're basically not one time framing yet. But once you have a signal like this, a gap and go is the same thing as one time framing. It's a signal of momentum to the downside. Really, more than trying to guess where it's running out of steam, it's better to just wait for the signal it's running out of steam. So earlier this morning, for me, that signal was the opening price. If it got back above it, now to me, that signal is the halfback. And once we print the C period low, it'll be 2 ticks above the B period high. So it's like, that's really more my focus. I'm not going to try to guess where the low is because it'll keep making good taper, coming back up, coming down, making good taper, coming back up. It'll keep doing that all day long. Why try to guess when the end is? Rather just stay with the momentum until I get the signal that it's over. That's sort of the easier way to approach it. Once you've established the market has momentum in a certain direction, the only real signal you're looking for is when is that momentum over. Mateus, do you think about one time framing on the daily much? Yes, sir. There are 2 daily trends I pay attention to. Are we making higher highs and higher lows, which is the equivalent of one time framing on the daily? And is the value area trending on the daily? So is the blue box moving up and down? And each day I make a prediction about what could happen the next day based on that fact. Did we make higher highs and higher lows today? Did we have value higher today? Okay, maybe we're trending. That's how I look at it. Scott, too risky to get in here? Yes, sir. Don't sell at the low. Wait for resistance. So they may need to push down one more time, and then you could sell at this same level if it comes back up and it's getting resistance there. But you don't want to sell it while it's the low in case, they turn around and head back up. So if you missed that one, wait for the next push, sell the next resistance. Screwball halfback of the previous gap. Interesting. A half gap fill. There you go. Well, we are also pushing into some support here between like 57 and 50. So I expect some more grind. Johnny, well, my name is Charles, but but I'll answer this question. It's a great question. You've talked about liquidation breaks on the intraday level. Can you have the same thing on a multi-day level? And what would it typically look like? Absolutely, you can. And what it would look like is a giant wick on the daily, right? So if, let's say, hypothetically, let's zoom back out to the daily. Let's say, hypothetically, this market finds support right now. Turns around, it passes back up through the opening price. It heads back up to start filling the gap we left behind in the gap down. It gets inside this previous balance area, okay, back inside this channel. Boom, out of nowhere. I mean, I'm talking about it will shock you. They can head right back up towards the opposite end. If they were to do that, by the end of the day, let's just say hypothetically, whoops. Let's say we poked back up and hypothetically closed like right here. Well, then today's candle will have a giant wick on the bottom. That's what a liquidation break on a daily would look like. There's one right there. There's one right there. Anyway, I could go back and find more. And that would, of course, be bullish for continuation to the upside. And of course, the first thing we would see, well, we got to start trending here in a couple minutes first. But then the first signal we would get is cessation of the trend intraday before the reversal on the daily would start. All right, there is the C period printed on away. As we print the C period, we recognize that we left behind some single prints in the B, heading back up to 4163.50. That is what we call the base of the single prints, or the beginning of the single prints. That level is likely now to act as resistance for the market to continue lower. If they're able to get the C period low below the B period low, the market will be one time framing to the downside, which is bearish. So having a gap down, value lower, gap and go, and then one time framing as well would further increase the odds that we're heading down to fill the gap to 41.39, the gap to the downside. So keep an eye on that C period low. If it breaks that B low, look for continuation lower. As far as resistance, like I said, the base of the single prints down, 4163.50 should act as resistance. If not, the volume at 66, and then the half back at 68. With that, I bid you farewell. Oh, I also wanted to mention next week I'll be taking the week off. So just wanted to give everybody plenty of heads up before that happens. I will be taking next week completely off. You'll be on your own. All right, cheers, guys. If you're in the brigade, head on over to the private stream. And the rest of you, I will see you here tomorrow morning. Thanks, guys.